Trading the forex market can be very discouraging and frustrating, especially when your stop loss repeatedly gets hit. When the market comes and stop you out more often, it's kind of discouraging and frustrating. So I remember at my earlier stage when these things used to happen to me, I nearly gave up on forex trading. I used to say, or I used to tell people trading is not real. Those posting their profit on the internet are not, there was something hidden, or there was something that they are not telling us about. Because anytime that I will set a stop loss, the market will come and what? Stop me out, and what? It will move in my favor. So this is what it used to happen to me. So when I set my stop loss, the market within a short moment or within a short period, the market will come and stop me out, and it will move in my favor. It will move according to where what I projected or predicted the market to be going. So I used to think about this thing a lot, and it was discouraging. It nearly made me stop trading. It nearly made me stop trading the forex market. So in this video, what I'm going to do is what I'm going to show you how you'll be able to what turn those losses or those pains into lessons that is going to save your account. So let's move straight to the video. These are the three things that you have to what take into consideration if you are facing this challenge. So first of all, you have to what anytime that you are going to place a stop loss, you need to what make sure you are placing your stop loss on what a stronger area of interest, okay, or a stronger support or resistance level. So someone will ask, how is it going to know this is a stronger support or resistance? So how you are going to be able to determine whether this is a strong support or resistance is what by what focusing on the time frames that you found the support and resistances. So especially if you are using M30 or if you are using M15 support and resistances, those time frames are not what stronger support and resistances. But if you are using the H4 time frame, if you are using the daily time frame, if you are using the weekly time frame, those time frames are what strong supports and resistances. So anytime that you are using, or anytime that you are placing a stop loss, make sure the level that you are placing your stop loss is what where you are placing your stop loss is falling on what those levels. You get it? They are falling on a strong support and resistance. That's what the weekly time frame, the daily time frame, or what the H4 time frame. So when you talk about stop loss, what it simply means is what it's a command that you give to what it is a command that you give to your forex brokers, okay, to automatically what take you out anytime what price will get to what a certain level. So anytime price will get to a level that you want them to take you out, the market or your forex brokers are going to automatically take you out. So stop loss is what a command, okay? It's a command that you give to your broker. So anytime that's what the price will get to that level, your forex brokers are going to what take you out from the trade. So that's the meaning of what? That's the meaning of stop loss. So anytime you are going to set stop loss, these are the three. I'm going to tell you focus on these three things. You are going to focus on what? The levels, the support and resistance level, the market structure. So the market structure, you're having two types. You're having what? The pattern structures and what? The candlestick structures. So you have to focus on these three things, what? To place your stop loss. So let's talk about the support. So you've already talked about the support and resistance. So the support and resistance are what? You have to make sure they are what? Relying, or you have to make sure you are leaning on what? A strong area of interest. That's the H4 support and resistances, the daily support and resistances, or what? The weekly support and resistances. So let's say this is our support and resistances. So let's assume this is what? H4 what? H4 daily or weekly support and resistances. You get it? So let's assume this is what? This is weekly or daily or what? H4 support and resistance levels. Okay, so this is H4 support and resistance level. So I've told you what, anytime that you are placing a stop loss, make sure you are focusing on these levels. So we are going to talk about what? The market structure. So the market structure that I'm talking about, the market moves in waves. So structures is the same as waves. So it moves, if it is in an uptrend, it moves what? Higher high, higher low, higher high, higher low, higher high. You get it? So this is an uptrend. You get it? This is an uptrend. So anytime the market will break the higher high and comes back and break the lower low, that means what? There was a shift in structure. So anytime the market will break this level, comes back and break this level, there was a shift in what? Structure. So at this point, initially the price, what? The market was in what? An uptrend. But the moment it breaks this one, it turns to what? A downtrend. So you have to take note of that. The market has now turned to what? A downtrend. You get it? The market has now turned to a downtrend. So you have to focus on these things. So if it turns to a downtrend, if you are placing your stop loss, so this is how it's going to appear. So if it is in an uptrend, it is going to be like this. You are going to see a bullish candle. So this is a bullish candle. This is a bullish candle, okay? This is a bullish candle. This, you are going to see a bearish candle. You are going to see a bearish candle. Okay, so maybe you see a bullish candle again. So this is how the candles are usually what? Formed on the markets. This is how they are formed. So this, in case maybe the next candle breaks this one. So anytime, so this is a structure. So in this pattern, this is what? An uptrend. So the moment the market will break, the moment it will break this tape, you get it? The moment it breaks this tape, it turns to what? The moment it breaks the tape, it turns to an uptrend. You get it? It turns to what? An uptrend. It turns to, so the moment you see a bullish candle, it turns to what? An uptrend. So when you are entering a market like this is where you are going to place your stop loss. So you are going to place your stop loss beneath structure level. So this is structure level, okay? So this is the point, or this is the level that you are going to place your stop loss. So your stop loss is going to be at the structure level, okay? If you are buying, if you enter over here, if this candle close, this is the point you are going to place your stop loss. Okay, so let's move to a live example. So when you move to this point, so the markets moved, it was in higher high, higher low, higher high, higher low. Okay, so if it breaks this one, if we are entering the market over here, if we are entering it over here, okay, if maybe you are entering it over here, the place or the point you are going to place your stop loss is going to be what? Beneath this. So this is the next structure level, okay? You are going to place it at this level. This is where you are going to place what? Your stop loss. The next structure level is where you are going to place your stop loss, and this point is going to be your what? Entry level. You get it? So this is what? Starting market structure. And we have what? And we have candle structure. Okay, so with candle structure, this is how the markets also move. So if it moves, if it is in what? Moving higher highs, if it is moving higher highs, maybe if it is in a bullish trend, if it moves high, the next candle moves high. So anytime that the market will break, okay, anytime that this tape, anytime the market will come and break this tape, you get it? Anytime the market will come and break this tape, that means what? Candle structure has shifted to what? An uptrend. So you have to take note of that. Anytime the market will, anytime price will what? Break the tip of this one, it tells you that what? The structure, the candle structure has what? Change. You get it? So if it is within this range, if it is within the body, you get it? If it is within the body, structure hasn't changed unless the body, the unless the tip of the previous candle has what? Broken. Okay, unless the tip of the previous candle has broken. So anytime that it breaks, it means what? It tells you that what? Structure has what? Shifted to what? An uptrend. So if you are placing your stop loss, you are going to place your stop loss beneath the previous what? You are going to place your stop loss beneath the previous candle dip. Okay, so this is the level that you are going to place your stop loss. This is the level that you are going to place your stop loss. So your stop loss is going to be what? Your stop loss is going to be beneath this level. You get it? Your stop loss is going to be beneath this. So if you have not subscribed to the YouTube channel, kindly do so. Subscribe to the YouTube channel and like the video. So if you are placing your stop loss is going to be beneath the previous what? Candle dip. Okay. It's going to be beneath the previous candle dip. So anytime that you are placing your stop loss, these three things you have to take into consideration. You have to take into consideration what? The level, okay? The level that you are taking your entry. You have to make sure you are what? Taking your entry on a strong level. And secondly, you have to make sure you are what? You have to make sure you are taking structure into consideration. So if you are placing your stop loss should be beneath previous structure level. And you have what? I've taught you how to what? How to what? To be able to determine candle structure. So what? If you are placing your stop loss, in case maybe you are buying, you are going to place it beneath structure candle, the dip of the candle. Okay. So if you are buying, if you enter over here, the previous candle dip is where you are going to place your stop loss. So it's the same as when you are selling. If you are selling, assuming maybe this is a bearish candle. So if this is a bearish candle, if this is a bearish candle, this is a bearish candle, your stop loss is what? Going to be beneath the previous candle what? It's going to be beneath the previous candle tip. Okay, the top of the candle. That's where your stop loss is going to be. You get it? That's where your stop loss is going to be. So if the moment it breaks this one, that means structure or candle structure has shifted to what? A downtrend. So you place your stop loss, over here and you enter the market over here. So I hope you have gotten value on whatever I've talked about. So in case maybe you're having challenge or difficulty on whatever I've talked about, kindly give a comment on what? The comment section.